Heidi ho, everyone. Welcome aboard. It's another Sunday. Therefore it's another weekly market update from the team ATW, and we will be going to the Big Island of Australia very, very shortly to talk to Ainslie, who I can see in the background there. Hi, A. We'll be chatting to Ainslie very shortly about that precious metal, gold, which has been under a bit of pressure. But maybe in a bounce position, one would anticipate. Not so much for oil, although it is at the support level. We'll talk about that later as well. We'll also be, it's kind of crazy. This financial market stuff never ceases to amaze me. We are now, 2 years and goodness knows how many months into 6 months, 2.5 years into COVID, for goodness sake. And as I walk around the streets at the moment, doesn't seem like anybody cares anymore. Yet, wow, what an amazing effect it's had on the global economy. Goodness gracious, you can't believe it. Although, pandemics are going to do that sort of thing, I guess. The global economy, of course, is contracting substantially. You can throw a war or two in there. Big one, of course, going on in Ukraine. The global economy as post-COVID, I can't say post-COVID, we're still there, right? But the result of COVID has given us inflation, it's given us interest rates, and they appear to be the main topics of conversation around, well, if you go to a pub anywhere, that's what they're talking about, because the price of beer's gone up, right? As it does, and the price of just everything that gets the beer to the pub's gone up. It's quite an amazing set of circumstances that we have at the moment, and central bankers all around the world trying to work out how to solve that. I don't suppose, of course, that Ainslie and I are about to solve that problem right now, but we can certainly talk about what it's doing to that precious metal gold, Ainslie, which has been under a whole lot of pressure, trending strongly to the downside. But as I say, it looks like it might be in a bounce point at the moment.
Yeah, well, it's a very interesting thing. So what I'm going to do is just grab the screen, if I could there, please. Share.
Sure
yeah,
can.
I'm good to go. Oh, here we go. Like I said, you have two screens, and as soon as you start pulling things up, they disappear. Are we having a look at gold analysis, 4th of September?
We are.
Good. Excellent. Good start. Like I said, things, as soon as you hit that shared screen, you're just like, now which screen? But anyway, so as I do with my reviews, do with my analysis, we're going to start with a quick review. We saw gold continue its downward move from its high of 1807 on the 10th of August. So I'm going to just take it and just going to encompass not just the last week, but the price action that we've been looking at for since I spoke on the 7th of August, I think it was. Now, obviously, NFPs, we always look for NFPs to see what else is going to happen, and the Friday's price action was better than expected. I think the forecast was for 295, and I think we came in with numbers around the 315,000 mark, and we saw gold bounce as a result of that. It had bounced from a low of 1688. So the previous low in July, I think it was about the 10th of July, was 1680, but if we go back almost 12 months ago, it was 1689. So this area, what's interesting about this area, guys, is just keep an eye on that 1688, because it's obviously a very strong buying point. When we go to the charts, you're going to see it a little more closely. We did have that bounce, and we did close at 1712. So we're back up over that 1700 mark. On the higher time frames, the technical setups that we talked about at the beginning of August, that we were filling us with a bit of enthusiasm, a bit of a kick in the step, failed. But that's all right. We were looking for confirmation. We didn't get the confirmation. And with all the other fundamental analysis, all the other bits and pieces going on with the aforementioned inflation and the strengthening US dollar, we did see gold take a hit. So quickly, let's have a look at how this all set up. As I referred to, there was a high test bar very early on this is a 4-hourly chart, high test bar, and then we just saw this decline. It just kept going down. to be quite honest, on a pivot bounce, it was a good setup. You know, you've got your 20, your 50 EMA and your 100 EMA in line, a rejection of the pivot, and then a continuation all the way down to S1 and S2. I don't have S3 on my chart, so, you know, it could have gone there. But there we go. You can see that low was 1688, and it started to climb up. And that was possibly because they thought things were being a little more hawkish with what was going on in the Fed commentary. And then we've got the non-farm payrolls having a better than expected number. Now, as I said, let's just have a look at, are we just trading in a range? We're talking about downturns, we're talking about this kind of stuff, but if you take a step back out, and if you're down on an hourly chart, for goodness sake, I do hope you are looking at daily charts at least, to give you a sense of direction, because you can see here, okay, we finished the week on a technical bullish engulfing, bouncing off a level. Am I ready to jump in and take a long on that? Absolutely not. But let's just keep an eye on what's going on here. We can, if we drew a line across the top of those highs from the middle of August, you've pretty much got a bit of a technical downtrend with 3 bars up, or 3 advancing soldiers in a downtrend, and bang, straight back down again to a level of support, known level of support. So bullish engulfing candle. What comes next week? Not sure. Let's have a look at the weekly chart. Again, weekly chart, you just look at that, go, oh, we're just puddling around. We're just puddling around in this range. It's a strong range, by the way. So backwards and forwards over this 1700 to 1800. We don't get much over 1800. I think that high was 1808 back at the beginning of, I think it was the 10th or the 11th of August. But one of the things we've got here, and I'm just keeping an eye on this, and this is weekly and it's quite strong, is the MACD histogram is receding back up to the center line. We've got price action at equal levels, and we've got the MACD histogram forming a divergence. Keep an eye on it. Like I said, we're not ready to jump into anything yet. This is the low test bar that we were talking about a month ago, and I was waiting for confirmation with a close above that hammer, which 1, 2, 3 bars back. I was looking for perhaps a shoot off, because August seasonally is quite bullish. We didn't get it. It failed. We didn't get the confirmation either. So that also is something that tells you shouldn't have been trading it. MACD still below the signal line, and an advancing DI minus, and the ADX above the 25 line at 25 marker point. So that should all tell you that it was keen to keep going. We were hopeful. It didn't work. So them's are the charts at the moment, but we are still trading within a range. Okay. So the fundamentals for the week are the pretty much we were very hopeful. There was a rally, but that gold had its initial shine right off its face, and it's landed back almost where it started a month ago. Again, that important level of around that 1688, 1689, 1680. If you go back and check from it, I think it's July last year, you will see that level everything bounces from those levels. So we'll just keep an eye on that. If it breaks below that, I think we're going to see a fall, maybe about down to 1650, 1640. I think it was 1647 below that mark. But we closed back over the 1712. This is why I'm saying proceed with caution. I don't have a perfect setup here. August is seasonally bullish period, but that only held true for the first half of the month. Remember, seasonality is only a bias. It is not an entry signal. The rest of the story has been that strengthening US dollar, which if you have a look at the US dollar from the 11th of August, it turned around and it hasn't come back really. So gold is really part of the gold decline. It's the strength of the US dollar. And we only saw that bounce, as you could see on the 4-hourly chart, was only a result of those better than expected NFP figures. So they're only 315,000. It wasn't exactly what you would say fantastic. It wasn't like it was the previous month, which was around the 520,000 mark. So they're the fundamentals. Where to for the outlook week beginning 5th of September? As I said, we're still in that consolidation range. And you can see that on the weekly chart and the daily and the weekly, not so much on the monthly, but that we do still have the month of August trading within that range of the hammer that was created in July. So let's just see where this goes to. Seasonally, gold is coming to an end of the period of the bullishness, and we're looking at a retracement, downturn / pause. It's a bias before the much noted rally. We know at the end of November 27 is a day I have marked in my calendar because that is normally the beginning of the gold rally coming into the Christmas. That starts that whole seasonality of bullishness from gold at the end of November, beginning of December. We need more information at the moment to see if the downturn continues, and that at the moment is very sensitive to US dollar strength, what the Fed says next, whatever that might be. Who knows? I don't think they know sometimes, but you just sort of go, what did they say? At the moment, gold is staying within that range. Okay, so on a technical basis, gold is still ranging. 1680, if we do have a crack below that coming into the next couple of weeks, have a look further to the downside, and that's just the way it has to go, I'm afraid, Geoff. Yeah, other than that, have we got a bounce on that bullish engulfing counter from Friday? Don't know. Let's see.
Yeah, look, I think that's a pretty key level right now. What is it? 1712.
So we've closed back up over the 17 mark. The key level is that 1688. So 1680, 1680.
That's the one.
89. As soon as it gets down there, it bounces back up again. And for every time it's hit there, and we're going back, we're not just talking about in July this year, we're going back July last year as well. That was 1689. So it gets down there and it just goes bing.
Yeah,
so it bounces back up, ping, or rallies, as we could technically say. It rallies. In Ainslie speak, that's ping. But we've got a bullish engulfing, and we've got to close above the 1700 mark, which is pretty important as well. So don't jump in on Monday morning. I suggest I'll be waiting for confirmation.
Yeah, you know what's most interesting, and I've only just noticed it now when I look at the gold chart. The most interesting part of that number, which is 1680, whatever it is, or 1690, thereabouts, is gold broke above that level as COVID hit, right? And it's been above that level since COVID. And every time, as you say, it hits that level, it bounces.
Yes.
I wonder, my first comment of the day was, we seem to be a little bit laconic about COVID anymore. I wonder, does that mean anything?
Don't know.
Interesting.
I don't know.
The week ahead will be very interesting. And as you say, the dollar has now poked through a very strong resistance level.
Yeah.
And
so it's taken off on the 10th of August. It really hasn't looked back.
So that's interesting.
Yeah.
And that will put pressure on gold and everything else, of course. And that's why we're seeing global indices segue into global indices. And of course, George has been pleading with us to stay bearish on global indices. Tick. Is he still a bear?
I remain very bearish with my outlook on stock market indexes. Last month, beginning of August, I pointed out that there would be more bad news. Now, some traders thought the bad news was over because they looked at the pullback that we had in July and thought that the bulls will completely reverse the market trend. However, using price action on the daily charts, I recommend you go back to that video. I indicated that there was a higher probability that the markets will continue to crash, that there will be more selling. The bad news is not over going into this month of September, and possibly as we head towards the end of the year, unless something dramatic happens that affects the fundamentals, there is still more bad news. I had 8 indexes that I trade, which represent a pretty huge chunk of the largely publicly traded companies across the world. S&P 500, if you are a bear, you're going to be looking to sell beneath the low of that candle. UK 100, again, you're looking to sell below here. Same thing for the Hang Seng 50. I'll talk about the few anomalies just now. German 30, Euro Stocks 50, France 40, Nikkei 225, Aussie 200. You'll be looking to sell all of them based on this month just gone by, the month of August. So we're right at the beginning of September. However, there are a few things you need to bear in mind if we talk about actually trading and taking advantage of the bear market. Go back to S&P 500. If you're looking to sell here, you cannot put your stop here. We don't put our stop there. We look for a further technical level. And the best place to put your stop would be here. If you're a bit aggressive, if you're a monthly trader, best just put it here above the high of 2022. You don't put it here because market may want to just go up, test the high of August, and if you put your stop there, you're going to get stopped out and it could just turn and accelerate down. UK 100, again, put your entry beneath the candle, but your stop has to be right up here. Now, have a look at this particular level here. This indicates the low that we have of the year so far. That's going to be a huge magnet pulling the market down, but also a huge level of support. So, if you're selling here, you've got to look to start taking your profits or taking some profits out of the market by the time you get down here. Hang Seng 50, pretty problematic for the bulls because we are right in the middle of this tight trading range here. Actually, in this market, you could sell here, put your stop above here, or if you wanted, you could buy here, put your stop here, because we are in the middle of the trading range. But because the probabilities favor the bears, if you're looking to sell beneath this candle. It's a doji candle, the candle of September. So you're selling beneath a doji, a high-risk trade, because it's a trading range, any breakout likely to fail. So you're probably only aiming to get there. And if you see a reversal, then you can jump out and go long. So pretty complex to trade, but tradable. German 30, very good structure for the bears, but their problem, of course, is the low of 2022. So if you're looking to take that trade open for a break beneath an acceleration down to a measured move of this trading range, your stop is going to be up here. That's nearest technical level, just above the doji. Then be prepared to hold through pullbacks until the market accelerates down. And that's the same kind of thinking you'd have again on Eurostock 50, of course, which German 30 is within. Same kind of thinking for France 40. Again, you can still sell, stop above the doji candle here, and hope that the bears can smash through that pullback and accelerate down. Nikkei 225, look at this trading range price action, tails beneath, tails below. And I mean, if you ever look at the August candle, huge candle, but a doji candle, trading range candle. So even you can still sell beneath here and take profits, but don't go away for 2 months. When you get down, you're going to look to start taking some profits out, because you might just reverse and go all the way up. So if you love trading ranges, excellent price action. Aussie 200, you can sell beneath here. I think there's enough mileage for you to go there and make a decent return before the market gets to this level. So the bearish price action carries on. I decided to use the monthly charts. If you go to my previous video, you can see the daily analysis that I did. At some point, probably middle of the month, I'll have a look at these charts, but on the daily. So enjoy the trading, and I sincerely hope that you profit from this bear market.
Awesome, George. And it's kind of take your pick, according to George, on all of those indices seem like good setups, and he's very, very much on the side of the bears, as he continues to say. I'm with him. I'm absolutely with him. I think that's absolutely good counsel. Man needs to sneak into the Aussie 200, actually. hopefully that's got a little bit more downside as well. We shall see. Speaking of downside, last week was a bit of a tragedy for oil, I suppose.
Yeah.
But it seems also to be in a $10 range there, between, 86 and 96.
Yeah, let's just go and have a little look at what's happening there, because it's a bit all over the shop for oil, and we all know that oil is very fundamentally sensitive. So somebody says the wrong thing or implies something or whatever, and then you'll see oil fly in one direction or the other. At the moment on my chart, and charts will change and alter just a little bit depending on the broker and the source of the liquidity of that commodity. So mine closed at 87.06 and it's continuing to trade within a range. Again, I will show you that on another setup. We do have a ring tie setup on the 4-hourly chart that started the week, but what has happened is the continued news that China's COVID lockdowns, particularly in those high manufacturing, multi-million-dollar regions such as Shenzhen and Chengdu, it became the narrative this week. It was all about what was happening as far as the lack of the China recovery story. So that really had an impact on the chart. So as you can see here, there's the ring tie on the 4-hourly chart, and down she came all the way down to yet another level on the lower end of the range. Again, there was a bit of action around non-farm payrolls, but that sent it up and brought it back down again, and it closed just above that level of support. So other than that, it was just down she went for the count. But when you look at, as I said, if you're trading down on those smaller charts, take a step out, and I please encourage you to all to have a look at a daily chart at least before you hit a trade, because you can see here quite clearly, it's used the 50 EMA as resistance, and it's just come back down again, and we're just sitting in this trading range. Will it flick down to the lower side? A lot of the just listening to a lot of the big banks and their analytical team are not saying that, saying that it's not going to go any further, that it should be turning around, and we should be looking at around oil, particularly coming into the northern hemisphere winter. We should be looking at oil getting back up over $100 again. So it's not next week, don't know, but for the short, and I'll call it short term, because scarily enough, when we flipped over the chart to September last week, we've only got 4 months of this year left, which in itself is just frightening. But we can see that we are trading in a range. We are not advancing like we had been previously, or in a chronic downturn. But we've had 3 days of a downturn. It doesn't make a downtrend. We are still within a range here, and have a look at that range on the weekly. Yes, I know we had we closed down low, but all we did was close on the low of that range. And if you flick up onto the monthly, again, we've got higher highs, higher lows, higher highs, higher lows, higher high. Yeah, we are starting to go back, but this is a retracement in an uptrend. If somebody would like to argue with me on that one, go right ahead. Not going to get far, but that is definitely a retracement in an uptrend on a monthly chart. That's what we've got. So moving ahead, the fundamentals. It was all about the Chinese weakness and the fact that they are putting other, the PMI index, which was really, really important, which was indicating that not much has happened. They were all waiting on the China recovery story, and it hasn't happened. The PMI index was the critical indicator for us to see if there was any movement at the station. There was none. The return of lockdowns. So Geoff, you were referring earlier in your opening review that it almost seems like what COVID, but look at this. China's putting big multi-million-dollar regions back into manufacturing regions, by the way, back into lockdown. So that's not a good thing. for the recovery story at all. They are still running with that whole zero COVID hope, let's call it hope, because it's just hard. Also, you've got a bit of political instability in Iraq as well. It wasn't a big move when that news was announced, but it's just failed to bring any bullish trend coming through at all. It's just there. And as I said, we've just got to keep an eye on all those very sensitive markets that have connections to oil, who are major players in that oil spectrum, not just Russia, not just China, not just what's being released by, the special reserves or anything like that. You've got to just keep an eye on all those kind of things. OPEC meets tomorrow, September 5. So do you think I'll be doing any trading tomorrow? I don't think so. I think we'll just be having a little look about what goes on and what they're going to do as far as increasing or decreasing production. I won't be surprised if they just say, let's leave production as is. That will see a bit more of a push up in price. But again, they've surprised us a couple of times in the past. So they're the fundamentals and what we need to look forward to coming up. As I said, the meeting tomorrow, take note, don't trade, wait for that information. It's very, very sensitive to OPEC at the moment. As I said, the daily chart closed with a gravestone doji, but you are talking about price action hitting the bottom end of that range. Is there a bounce? We need to just wait and see on that one. The monthly chart shows a sharp retracement from the uptrend in place. So that could have just simply be three stone crows, I think. Three black crows. The stone crow is a pub in Crow's Nest, isn't it? I should ask you, Geoff, you would know. It's a pub, three stone crows. But the three black crows. Unfortunately, I do. That is a technical setup for just a retracement in an uptrend. So we'll see what's coming forward. But just beware of the further volatility. So that's my oil review and summary, chart analysis, and what's coming up. But the big one will be what they do tomorrow at the OPEC meeting regarding production.
Yes, and I think the big one for generally the markets globally will be the ECB press conference on Wednesday or Thursday. I think it was probably Wednesday, if my memory serves me correctly, because the dollar will react to that, and that of course, that of course will shape pretty much everything else for short term anyway, if nothing else. Do you know what, watching your analysis is fantastic. And it takes me back. It takes me back to when my trading improved, because I never used to do that. That's work, right?
Oh, that analysis thing.
Yeah, I used to turn the charts on and expect to just jump into the market and everything would be fine. But the reality is, unless you do that work, and it's best done over the weekend, of course.
Yes.
So that you've got exactly what you've got in front of you. You don't have to rely on your memory. You've actually gone through the process. You've noted it down, and you can refer back to that at any stage during the week. Think, oh, what was I really thinking at the beginning? Oh, that's right. That happened. Here's why I have this opinion. Here's why I'm biased in that direction. So if anybody here is watching that doesn't do at least, and I'm not suggesting you go into the depth that Ainslie does, but when I started doing, well, go on then. Go to that length. But when I started doing that, and I did it every day, not just at the week, I did it, updated it every day, and I'd produce a chart of euro dollar and give my opinion and all the rest of it. And I didn't have to worry. I didn't have to think too much when the market was in action.
Well, there's a reason I know that 1680 is a really key level on gold.
There you go.
And I also know that I've got to listen for OPEC meetings for oil. And if you are going to trade commodities, everything's tradable. It's just that you shouldn't. It just, with some of these commodities, just learn what makes it move. I mean, the interesting thing with the euro hitting parity over the last couple of weeks is, I remember going back about maybe 10 years ago when the euro, everybody thought it was going to crash and burn and disappear when it went to $1.30. And that was that was, you could see it come down to 1.3 and it would bounce back off this level. And it was driving me crazy because I was just waiting for this to go. And then I found out there was, when it got to 130, there was a lot of Russian money propping up the euro because they had a vested interest. What isn't around as much at the moment?
Mm-hmm. Interesting.
And we've seen it just go down, 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 down. So that influence, and people say, oh, you know, nobody can corner the market. It was just like, there's a lot of Russian money actually on the euro back then, but it's not around as much anymore. So it's interesting that you have new players in that whole scenario, that whole scene now. But yeah, ECB coming up this week, and how that's going to impact with the US dollar, and are we going to see it go down to 95 cents? It'll be very interesting with the euro this week.
It will be very interesting to see what the ECB, well, they're supposed to be going 75 basis points. I think that's what everyone's forecasting. If they miss that in either direction, I think we're going to see the market do very interesting things, at least for short term.
Yeah.
Mate, thank you so much for your input. As always, very, very interesting. And now I need to add just a little bit extra to euro dollars analysis. Look, Russians. Thanks, mate. Have a great week ahead.
Have a great week. Have a great week, everyone. I hope that helped. And as I said, both of those golden oil, I have not got anything to jump in and say, hey, let's get excited. We're going to have to just wait and see and be very patient on this one.
Guys, thank you for sharing your Sunday with us, at least for that brief half hour. And we look forward to your company, as always, next Sunday, when we will do it all again with probably 3 different traders, I should imagine, as is normally the case. Sam, thank you so much for looking after us, and have a wonderful weekend, everyone. Week ahead.
Weekend's gone. Happy
Bye-bye
trading.
for now. See you.